Welcome back. You're watching Invest Africa. Well, just over a month ago, cash-strapped Malawi announced that it will be inviting bids for the president's jet as it tries to raise much-needed revenue. This is a continuation of the cost-saving measures vowed by President Joyce Banda to accelerate economic recovery in one of Africa's poorest countries.
According to President Joyce Banda, before taking office in April last year, Malawi's economy had almost collapsed. Relationships with countries' neighbours and with key donors such as the IMF and Britain had been strained. The Malawian government then embarked on a two-phase recovery plan. The immediate phase to restore stability included austerity measures that were criticised for adversely impacting on the poor.
We needed to take those steps. We needed to make bold steps. We needed to devalue the kwacha. But what we needed to do is also to inform Malawians, to sensitize Malawians that it was going to get hard before it gets better.
The medium to long term focused on restoring donor relationships, but with an estimated 40% of Malawi's budget funded from financial aid, this has left the country financially vulnerable.
What we should look at, though, is the end intention. Basically, that several African countries, not just Malawi, including Rwanda, try to wean themselves off that debt in time. So as we progressively move forward, we hope that 40% drops to 35, 30, to a point where the government becomes self-sustaining. I think that's the end intention. I think the big concern is when diplomatic relations with the international community turn sour, then there's an abrupt switching off of that tap.
To move forward and in a bid to become more self-reliant, the Malawian government then identifies strategic sectors pivotal to empowering the country's economic growth.
There are several other things that we have done, we have to do in the social sector that will, for me, will translate into my country is growing, my country is prospering, the lives of the people is improving, rather than just panic.
Still with me in studio is Simon Schaefer, Senior Research and Strategy Analyst at Frontier Advisory, Abel Myberg, Associate Director at the Africa Desk at BDO, and Samantha Louis, who's Regional Director at the Chartered Institute of Management Accountants. If we get back into looking at this economy becoming more self-sustaining, Abel, we've got the government, as we heard in the pack, identifying key sectors that are pivotal to actually powering that drive moving forward. Let's explore, but the kind of opportunities that this economy is putting on the table for investors.
Look, I think in terms of that, you need to look at current economies that's there, industries there, and maybe build around them. For instance, in agricultural, because that's part of Malawi's setup, is agricultural is one of their big industries, but then you can develop around that, in terms of exporting, making sure that not all the raw goods are exported, but then you can put in a process of processes in place to develop the goods, especially if you look at what do you call it, in the meat industry. There's several industries that can actually benefit from the meat industry. Look at dairy as well. That's interesting when the facts when you came with Malawi is one of the countries with the lowest milk consumption from all African countries, but then you sit with this massive production of milk, so you can look at the regions, for further exportation of that.
Yeah. Is investment perhaps being hindered, Samantha, by the fact that we're looking at a population where 74% of that population lives on less than $1.25 a day, and you've got to, as an investor, look at that market you're catering to, because at this stage of the game, it seems like you're moving in to export your product.
Indeed, and I think we've seen examples in Africa where large multinationals have been really clever about how they repackage their product for people who are in low income environments. And for example, instead of selling your washing powder in a big kilogram box, you're selling it in small amounts that can be purchased on a daily or weekly basis, where people can use their cash income to support that. So it is about being clever about how you package things and how you distribute things. But I think you also need to make sure that even if you are manufacturing in company for export, that you're leaving a proper legacy behind and that you're upskilling properly, you're paying people properly, real jobs, economic jobs.
Yeah, I ask because, you know, if you're looking at a company setting up shop in a country like Malawi, you've got to look at those cost pressures that get exerted, and part of that coming with the challenge that the lack of infrastructure or that infrastructure deficit, you know, brings into the equation. Simon, just how much stride are we seeing in the government investing enough in infrastructure, enticing the private sector to venture into PPPs with them?
I must say that, for example, the road infrastructure is not as poor as people would expect. 2 months ago, I drove quite a bit in Malawi, and the infrastructure was relatively decent. Obviously, if you have a lot of trucks, for example, exporting sugar, which is produced in central Malawi, you have the problem of a lot of damage to the roads because of the heavy trucks. Mm-hmm. So I think it's not necessarily only building new infrastructure, but maintaining the existing infrastructure. Yeah. Just recently, I think it was last week, the government announced that it will cooperate with Chinese companies to upgrade the airport in the capital as well as in the commercial hub of Blantyre, and also to build a new airport on the southern tip of the lake to boost tourism in that region. Mm-hmm. So I think there's certain things which are already in place, but I think, as I said, the maintenance of the infrastructure is necessary. As well, you have to improve the power situation. Power outages are a nightmare to companies that are producing. Well,
we've got unreliable power, water shortages, poor telecommunications infrastructure. All of these are impediments that impact productivity of any business in a big way, Abel, but just as much as a shortage of foreign exchange does. So how do you mitigate against that kind of risk? Because that certainly damaged the country's reputation in terms of its ability to pay for imports.
That's very true, you know, because I think it is one of the pressures that's from the IMF as well upon the government of Malawi is to bring in proper structures and proper policies in terms of their foreign exchange to ensure that there's enough foreign exchange available for investors, you know, when it comes to exporting of such, you know, and even repatriation of profits and dividends, you know, and then with that you need to balance again, you know, against your GDP. You need to look at your inflation rates, you know. So that's such a fine line. But I was quite impressed with the earlier comment that we made, you know, in terms of we need to educate as well, you know. So I think that's a role that some of the bigger nations can play very, very closely in Malawi, you know, especially in the region, because it's a strong region that we are in.
Samantha, at the end of the day, the investors are going to weigh the risk and the cost against opportunity and ability to actually rein in profits. Bottom line, is it worth it?
Oh, I'm an Afro-optimist, I'm afraid. So yes, definitely.
Definitely. Okay. For those who have seen the opportunity, it hasn't been all, you know, smooth sailing. Halfway through last year, government enforcing a law barring foreign investors from carrying out trade in Malawi's outlying rural areas. I mean, that was seen as an attempt to protect your local small-scale businesses from competition from foreign investors. You've got to look at the kind of message that sends out, where you've got people trying to be optimists.
You do, but I think in a society like that, you have to understand that there's a move to protect people from potentially being exploited too. And so I think it's about balancing both sides of the coin.
It can't, you know, help but make you wonder, though, where that line gets drawn, Simon. I mean, bringing investment uncertainty into the forefront, because, you know, investors would get nervous entering that kind of scenario where government can dictate where you can and cannot do business.
Well, you also find those kind of developments in other countries on the continent, so I'm not sure if it's a unique Malawian problem. But obviously, if you want to protect an infant industry in certain parts, be it, for example, small-scale agro-processing, I guess a small company in the rural areas can't compete with a multinational coming in, processing sugar, processing flour or something. So I think there is some sort of rationale behind it that you want to protect, but on the other side you have to be very careful what kind of message you send out.
Because you've got able governments saying rules should be respected and we don't encourage traders that go into rural areas, we encourage real investors. What then constitutes a real investor?
Yeah, that's an interesting question when it always comes to Africa, you know, because we always say we have the law, and then the application of the law could be interpreted differently by various parties. But what's encouraging to me is that they've got proper legal setup in place, you know, in terms of the Investment Act and the Companies Act is going to be changed now as well, you know, to give clear definitions of this, you know, so that you don't have this maybe this and maybe that, you know, attitude. So that to me is encouraging, and investors must use that as well as a positive. Yeah. So that you have means of going to arbitration or defend your position in that country.
It's easy to see the kind of rationale that the government is coming to the table with. Samantha, Malawi, though, puts itself in a very precarious spot when those rules get bent. I mean, in a bid to develop diplomatic relations, we've had China managing to influence economic favors its way in exchange for loans, grants, development support, helping develop the country's productive capacity. Some are not happy with the kind of influence that China has on the Malawian economy on the one hand. On the other hand, we've seen the country abandon ties that it's had with the likes of Taiwan over 41 years. So is this a country that needs lessons in diplomacy?
I would suspect that Malawi would not be the only country in Africa that has strong ties with China, and you may wish to add to that. China is looking at Africa and making inroads in Africa and working very closely with governments across the continent. So I would not say that Malawi is unique in that, and certainly Chinese investment comes with conditions.
Yeah. How does the country then, and like you highlight, many other countries on the African continent actually work to work these relationships so that it does at the end of the day work to their favor and not deter other foreign investors from coming their way?
I think it's, you know, I do think that the new president has really made a concerted effort to rebuild diplomatic relationships than what we'd seen under the previous regime. And I think that is, again, a time-consuming thing. It is about building trust. It is about showing that you're committed, showing that, yes, you're prepared as the president to sell the presidential jet. That's symbolic, of course, but it does send a very clear message.
Well, certainly work in progress that we're seeing unfold in that territory. Thank you so much for having joined me at the desk today. We've come to the end of this edition of Invest Africa, and my guests were Simon Schaefer of Frontier Advisory, Abel Myberg of BDO, and Samantha Louis, who's of the Chartered Institute of Management Accountants. Until next week, from me, Alicia Seckham, it's goodbye.